This one is important. Please make sure you stay to the end. I have a lot to discuss about the macroeconomic environment, some technical analysis on the charts, and much, much more. So definitely stay tuned. It's going to be short, but very packed with information. So let's get straight into it. Firstly, we need to look at this. The Fed is going to have a statement on the 26th of August where they're going to discuss the macroeconomic outlook of America and I guess the world in general. Why is this important? Because the things that they say have been dictating the markets for the past 6 months and the past history as it's known, right? Every single time Jerome Powell comes out and he says some information related to the Fed raising rates, inflation, so on and so forth, then the markets typically have a reaction. The reaction is usually larger from uncertainty rather than certainty in when they've confirmed something. But still, if it's negative uncertainty, it can go down. For example, if he says, oh crap, inflation is higher than we expected, I am going to start raising rates again, even though he said he wasn't really intending on raising them anymore, then that would probably be a very bad thing. And it seems likely given the sentiment recently. Of course, the Ethereum merge is a big deal and is coming up, but I think that was priced in long ago, and I think the event itself will probably cause some kind of dip in the market, although it will be overall long-term very, very bullish for Ethereum in particular. So I don't doubt that for a second, but I'm going to take that out of my mind for the moment. The first chart we want to look at here is Ethereum itself. Now, I've got it on the weekly time frame, right? A really, really big time frame, but you can already see that there's a giant red candle right on top of one of these moving averages, which I believe is the 144, which is the 144 EMA. The other orange line up here is the 100 moving average. The one down the bottom here is the 233 EMA, and the one at the top, 55 EMA, 50 EMA at the top. The white line is the 200 moving average, which is a big one, and the one we're going to focus on. And the other one's the yellow is the 233 exponential moving averages. For those that don't know what a moving average is, basically it takes the average price across a set amount of bars, for 200 moving average, the past 200 bars, and then it pretty much plots on the graph. It's very simple. Exponential moving average has a heavier weighting towards recent bars, so it tends to move a lot more fluently. I don't know, I like both of them, but the EMAs, as long as you represent Fibonacci numbers, they can do a pretty good job as well. Now, what I'm going to show you here is how to do a trend-based Fibonacci extension. Many of you may already know what a Fibonacci extension is. Fibonacci are the numbers that are present in the entire world. They can be seen from the Great Pyramids of Giza, the Colosseum, you name it. Fibonacci is represented, and it's a mathematical equation that I think the guy's name was Fibonacci came up with. Basically, a few of the key ones are 0 and 1, obviously, 0.618, which is about 2/3, and 0.382, which is a bit more than 1/3. It's about, it's about 4 out of 10, right? 4 out of whatever. Anyways, those two are pretty major ones, but the 618 in particular is what I like to focus on whenever I'm looking at technical analysis in the charts. Now, a trend-based Fibonacci extension actually takes 3 points. You can do 2 if you want to, but you can actually make it take 3 points. And what it does is it figures out a Fibonacci extension based on the trend itself rather than just 2 points. In this case, we've done a really long-term Fibonacci extension. My white lines here are the 618, and is the most commonly retraced to Fibonacci number. The other trend-based Fibonacci extension I'm going to pull up here is the next largest one, from the top peak there to the bottom to the top again. And this one here is also quite long term. And what you will notice is the 618 was pretty much hit on the dollar and it was rejected off of it. So there's a lot of resistance that it hit and completely failed on. And again, that is a really common retracement fib. Now we can see also up here that it retraced to the 0 and the 0.5 fibs on the two different extensions and got rejected off of them as well. So what this is telling me right now is that was just your everyday retracement in a downwards trend. So we could definitely see the trend continue to decline. The other aspect here is that as it came up and as it started to interact with this resistance, you got this giant candle right here, but your volume was actually significantly lower than on many of your candles beforehand. Your volume was not there. So it was more of a fake out than an actual pump. And we can go further into this. If we go into the 4-hour chart and we look at these candles up here, you can see you had a giant volume spike to get up to this resistance. Then at the resistance, you had absolutely nothing there. You can see at the start of the run up, you actually had quite a bit of volume coming in around here, and that pushed you up. And you can see even when you came back to these lows, you got more volume coming into the market as you were bouncing off those moving averages. So you can see that it's just extremely weak. And even here, the volume is continuing to decline as we go down. Now, these other things down the bottom, I won't really talk on them much today, but we are hitting those overbought levels. So it looks like we're going to be descending again, especially since a bearish divergence is playing out here on the money flow indicator. Now, it hasn't quite played out, but we can assume it's probably going to. It is surprising that it got above the 200 moving average for the 4-hourly chart. But if we look back at the daily chart, you're still below a lot of resistance and all of your Fibonacci. So it might retrace back up to 2K, but I definitely see it descending in the long term. The next chart we're going to look at is ILV against Ethereum. Now, we're only going to look at the 4-hourly chart for this one, but as you can see, it is in a major downtrend. Regardless of what you see on the ILV USD pair, you can definitely tell that this is not performing particularly well against Ethereum. So when you're staking your ILV tokens, I would definitely be considering putting them in the liquidity pool with Ethereum so that they can help hedge each other. Because at the moment, Illuvium is the weaker token. And even though we know that when RevDiz and the game and things kick off, it will be one of the strongest tokens, for now it's quite weak. So either hold off or try and hedge it as good as you can, but never stop buying into the market over long periods of time. And as always, this is not financial advice, and I am not a financial advisor. And if anything you're seeing here is helpful, please like and subscribe. We've got a little bit more to cover. One last really important detail, okay? The last chart we need to look at is something called the DXY. Now, what is the DXY? The DXY is the dollar, let me just double check, the dollar currency index, okay? Basically, this is an indication of how powerful the US dollar is. And as the euro and pound have been declining to meet 1-to-1 and even go below the US dollar, you can already tell that it's really strong and it keeps rallying. Every time it rallies, everything else dumps. Very, very simple. Pretty much nothing goes up with the DXY except like treasury bonds because they're based on it largely, I believe. Anyways, so the DXY has been rallying for a long time. And there is one other important factor. If you guys follow my Twitter, I would have mentioned this already. But every time the DXY properly peaks, now we won't know this for quite a few months. You can't just guess that it peaked. It could go up again. But every time the DXY did properly peak, then about 12 months later, crypto peaked as well, which is insane. So this peak up here was in March 2020, and we had the bull run leading into March 2021 before the big crash, right? Insane. This one here was pretty much at the start of January 2017. And pretty much the start of January 2018 was the last Bitcoin bull run that crashed out. Okay, so it's like clockwork. It's insane. So we don't know if it's peaked out, but if it has, then we could see new all-time highs all over crypto in August in 2023. Now, I don't think it has. If I zoom out a bit more, you can see that this channel here is ginormous. So I do think we're going to come up and hit some of these fibs and things and touch on the channel, and then maybe we will descend. I don't really know what the future holds. There's so much happening in the world economy, macroeconomics, China, everything. There's a lot going on. So it's impossible to guess something like this. But if we look on the monthly chart, I feel like the monthly is a pretty good indication of if it's peaked or not. You'll notice that all the major peaks, you've pretty much had a bearish engulfing candle, which is where the red candle on the right fully overtakes the green candle that is next to. So we've had a lot of these on the monthly indicating the tops and the peaks. Down here, you had a, I can't remember what it's like the spinning top one. You guys remember the chart patterns better than me. This one here is a common bearish candlestick pattern. These three are all common bearish candlestick patterns, but we haven't seen anything like that yet on the monthly. So we've got to wait until we get confirmation before we can start looking at going even heavier, okay? I still think now is the best time to buy. Like, historically, these sorts of periods have been the best to buy. but definitely exercise caution and definitely do not go all in. I do think we have more downside, and even if we don't, do not invest more than you are willing to lose. Also, last thing, please check out my Substack. I'll leave it in the description down below. It's awesome. I write a newsletter every month. It costs $5 to be able to read the whole newsletter, but you can read some of it for free. And it's awesome if you just like hearing my thoughts and everything I don't have time to put in the videos. It's definitely worth a read. I put a lot of work into it. And it's a lot of fun. So have a good one, guys.